The Dow traded relatively flat today, doing a doji type day, but notice how it's just below the T-line. But also notice that it flattened out over here, traded indecisively with hammer signals, dojis, representing that there was indecision between the bulls and the bears. Then they traded up above the T-line, pulled back below the T-line, but they don't seem to be going anywhere. This would be a negative connotation that the Dow is trading below the T-line, stochastics heading down, if it weren't for the NASDAQ. As can be seen in the NASDAQ chart, it never closed below the T-line and it traded up positive today. This is your classic fry pan bottom J-hook pattern, setting up for another J-hook pattern. So this is actually a good strength signal in the markets, where when they take it up, they consolidate. Take it up, consolidate. If this market opens positive tomorrow, the NASDAQ is going to be moving further away from the T-line and approaching the recent highs, doing another J-hook pattern, which also would indicate that there's not any great selling in this market. So even if the Dow trades sloppy flat below the T-line, the combination of these two indexes tell us there's no real great selling going on, just distribution of different sectors. When utilizing the patterns that the Japanese race traders have established or identified through the last 300-400 years, it makes trading much easier. Notice the scoop type pattern on USU. And when it broke out of the scoop, notice what it did. It ran from approximately the $5 area to the $27 area. Now we can analyze what's happened here. Notice how far away you are from the T-line, and they started selling. The only difference in this selling is it's not a reversal signal. It's just selling, profit taking, and it came back to the T-line, which acted as support. Now we've got a J-hook pattern in progress. Now the nice thing about identifying a chart like this is notice what wave 1 did. Wave 1 moved from $3 to $27, 24 points. We know wave 1 and wave 3 are usually equivalent. This means this stock price could move as exuberantly up to the $40 area. Will it move up there? Who knows? But the probabilities right now say we're in the right direction at the right time, that even if it moved back up to test the highs, you still have a 20% gain in a stock from this level. On the other hand, in a flat market, you're going to see selling signals. Notice how things kind of double topped on RAX. But the last signals we saw was a bearish harami, which told us the buying had stopped. Then a gap down through the T-line, which told us we were in a downtrend. Today they took it up, but by the end of the day they had sold it off hard, heading in this direction. That's confirming that the bears are still in control. Now you can identify where your likely target is. With stochastics just turning down, this stock could come down another 10% all the way back to the 50-day moving average. 10% is a decent return. Also makes for very high probability option trades. You might do a 45-40 bearish spread, because the value of this option right here, which is where the likely support area is, allows you to get much more leverage out of your trades. So using that information built into each candlestick signal and pattern allows the investor to take advantage of the signals and calculate where the targets might be. That's it. We'll see you in the chat rooms.